What's going on, everybody? AXisALiVE and SilvertheAntidote here to give you guys a hot market update. You know, it's been pretty wild the last couple of days of price action on the short-term time frames, and so Silver summoned me to come together and kind of give our little analysis of what's going on.
Summoned! Get back to work. Let's get this information out there for these guys today, huh? Because everyone's like, what the fuck is going on out there in the markets? It's like, boom, this way, boom, that way, boom, that way. Man, we need information. We go for us, AXiS.
Well, let's pull up the dollar because apparently everybody wants to abandon the dollar, and we're gonna just destroy everything that we ever knew. Right? Been on this earth for 33 years, and you know, I don't know if you guys are thinking what I'm thinking, but I'm thinking about it's time to get out of the United States of America. But no, well, not really. I'd get out of the UK first because they're going down first.
Well, I'm only back here on holiday, yeah. So let's get that one straight.
All right. I stand corrected. But yeah, so what we have here on this chart is a nice break of the midline of this upper wedge here. I'm sorry, ascending channel. And let's see here if I can pull up. I think I pull up something else. I got to pull up the moving average. It's a 12-month moving average on the dollar to show you guys how that got rejected off. It's been playing out for many months now on this chart, but now we just had confirmation, broken structure. I think Kareem went ahead and posted about this recently, and you can see here that on this 12-month moving average, how we went up to retest, broke down. Now we've broken this horizontal line. That was the structure, and now we're heading lower. Let's see if I can pull up. Another thing I like to show with this is, and I was showing Silver this morning, was the average sentiment oscillator. So anytime you get this on these longer time frames, anytime that this red line on the bottom changes direction, it means that bearish sentiment is entering the market. So here in 2015, again here in 2019, and then most recently in October of last year, the average sentiment oscillator indicator actually signaled that bearishness was coming back into the dollar, which meant that the dollar was set to crash. And now we're actually seeing that play out live, and we look like there's a bearish cross that's coming as soon as this month or next if it keeps up with this rate of decay. And you know, this comes on the back of news from OPEC saying that they're going to reduce their oil production, and then that, you know, obviously affects the entire global economy, and also the BRICS nations, along with others, are trying to abandon U.S. sovereign debt. And then, so you can see here clearly that the bearish sentiment's coming in. You're seeing that resistance hold at the 12-month moving average, and then conversely, well, where are people that have dollars? Where are they going? Well, they're going into gold, right? They're going into the thing that's just had a bullish cross up. It's broken its multi-year high. Let's see, this goes back to 2020 August, a test of the $2,000 an ounce, and then a retest of it in March of this last year, and then now we're actually breaking out as we speak. And this all comes on the back of Dogecoin getting listed as the new icon on Twitter, and so the Ethereum had a nice pump today. It broke through its midline, and so there's a lot of weird stuff going on. And Silver can kind of elucidate us a little bit more on what he's been seeing on the crypto side of things.
Yeah, I think it's important to actually break that down a little bit more, because you kind of hit it full force, right, in everybody's face. Bang, take that. But you need to wind it back a bit and actually like condense and consider people that actually are holding, $1 million, 10 million, 100 million, $1 billion worth of dollar, be it inside of corporation accounts, be it inside of high net worth sovereign accounts, and be it all the way through the high tier middle class. They're now looking at the situation right now from a US background of like, fuck, you know what? My dollar is actually losing purchasing power across the world right now. What the fuck do I do? They're in this little conundrum right now. It's all good and well if you're US based, because that is going to be relative inside of that sector. But when you actually like you calculate how much of that US dollar is inside of the masses control, it's very small. It's like 90% of the US dollar value is inside of the very few percentile in the echelons of society. So they are very, very concerned about the market right now. And they are now trying to hedge and look for exits. They've been looking for exits for a long time. Okay. And one of the things that we never really knew how it was going to break, what was going to be the thing that breaks the camel's back, but it started to break now. And we're seeing where the outflows are going. So we're seeing them going, as expected, directly into gold. The gold now hitting resistance lines. This is hyper fucking bullish. But at the same time, we're seeing crypto going fucking crazy inside of the Ethereum, inside of the Bitcoin, because these are the most liquid markets inside of the industry. And AXiS will show you the breakdowns of the charts of the oils, of how the forexes are trading. Even all the other currencies over the world right now are pumping compared to the dollar. So it's almost like they're in a situation of it's safety. People are needing safety. Where is that safety? And nobody knows. Literally, headless chickens. Cut off everybody that actually owns US dollar, and then just let them flee into the market and find what they deem as safe haven. Which is why anything pretty much other than the dollar is catching a bid. Would you disagree with that?
I would say that's a good assessment. I mean, where else are you going to take your money? If it's losing purchasing power every second, you're going to get into something. Real estate market's kind of overvalued here in the States right now, so that might not be the play. But gold has been one of the most longest standing, financial assets that we've had for thousands of years, and you're seeing this with other countries where they're abandoning U.S. sovereign debt, something I've been harping on for many months. And they're trying to get on their own currencies, and they're backing it with commodities. We're heading towards a commodity-based economy. And so with that, when you see this flight to gold as an inflation hedge, because if your purchasing power is getting debased every day, you're going to have to find something that's going to outpace the losses you're going to get in terms of purchasing power, which makes everyone naturally have to be a speculator in this environment. Because if we value things in the reserve asset and the reserve asset's losing its status, we're going to be searching for something to outpace the devaluation of the thing that everyone holds. And that's why the prices of everything will rise up like cream to the top, as what the underlying denominator is devaluing every second, because basically the U.S. government is stuck they're going to have to print money to get out of this and raise the debt ceiling. That's what's going to end up having to happen. So it's more, it gives us a predictable rate of growth here.
I think that leads us into a really important question here. Now that everything is kind of reaching those high bands, those resistance areas, which normally would be rejection zones, if we actually take into account what is the risk factor, which is the dominant fiat market in the entire world, if that is on a continued trend, maybe you can show me some projections of what it is that you're seeing on the DXY, what you see in the US dollar valuation, what potentially we may be facing going into the next, say, 2, 3, 4 weeks.
Yeah, so the downside on the dollar is like basically it's in my mind, we're headed toward 98.50, which is down here. And anytime that you get this kind of a spike down, what would that be in dollar terms? 3% on a multi-trillion dollar. There's trillions and trillions. I think 60 trillion is the total cash in the liquid in the economy globally. So when something of 60 trillion, it's a lot of zeros, moves 3%. That means a lot of dollars is flowing into other things during that time frame. I mean, we've already seen that here since last October when we had our blow off top on the dollar, which is why I then pointed us to gold to kind of show you guys the upside that would lead to on this asset. So this is a clear cup and handle. As you can see here, the way that you measure a cup and handle pattern is you measure the depth of the cup, and then from the low before the breakout, you measure that up. So you just copy this line over. And so we'll do that now so you guys can get an idea of how high gold can go in this kind of an environment. So if I flip to the monthly, it could be a nice cup. You can see clearly there's like the cup here, the handle. So what we'll do is we'll measure from the bottom here to the top. I'll just use the candle body close and then drag this out. And it should have us somewhere between 28 and 2,900 per ounce of gold, which this is a $12 trillion asset class. So a 40% move on gold is possible in the coming couple months, I would say, on this hyperinflationary pressure that's coming in. And just to couple that with cryptocurrency, obviously gold is still the slow mover, but one thing that's interesting about it is last fall, it did actually bottom first. Gold had a triple bottom here, bottomed first. And then it was Bitcoin bottomed about, a week or two after gold had its third bottom for the triple bottom close. So it's cool that gold is actually telling the story of the inflation hedge and that the dollar is losing dominance. But that crypto and then obviously in returns, in percentage returns, obviously kicks the shit out of gold. Like it's up 78% in 133 days on Bitcoin versus 25% in 150 days on gold. But gold is a signal here, right? That this is the play that to outpace inflation. We'll all have to be speculators in this environment.
I mean, if we can actually get to see a decent break out of that, because I know how heavily manipulated those markets are, there are triggers in place for certain percentage gains inside of where this is traded. They call them circuit breakers. So if it moves, I think it's about, if there's 5 circuits that are broken inside of a trading range, that's it. They're going to close down all trading inside of gold on a certain time frame. Call it a day. They just lock it down, so it won't be able to trade no more. Now, the other interesting one about this is it's only a paper traded valuation. It doesn't actually take into realization if you actually wanted to acquire physical, tangible gold inside your hand, and that is going to come with probably quite a significant premium at the moment, even if you're actually able to acquire. And there will be limited allocations available, probably globally at the moment. It's not something I look into at the moment because I moved away from precious metals a long time ago, focus a lot more on crypto, because crypto can be moved border to border, through the borders. It doesn't even matter. Gold, precious metals, silvers, platinums, all these things, very difficult to actually, if you have to take quick action, these are not things that also you want to be in. But if you're trading paper derivatives, you are still susceptible to manipulation on these particular price ranges. So the next question I actually have is going to be, if we take people who are looking for safety. Currently, they are pinpointing gold as one because they come from a traditional financial market. This market is a lot bigger, and we've been taught that the bigger the market is, yes, the harder it is for it to actually move, but also that can work in your defense. The harder it is to actually send the price down, so you're more likely to lock in valuation hold. Keeping fair value of the transitional value of what you're trying to protect, right? Asset protection is what gold is all about. So when we actually take into consideration something like cryptos, if you actually, I think you mentioned something like 12 billion, or was it 12 trillion for the gold circulating supply? I guess you could 12 trillion.
As the dollar value of it that's back there. But
yeah,
if
and this
3%, then doesn't that imply that there's like a magnitude more of a rise in the price of gold? And you can kind of see that on these resistance levels here.
Yeah, gold. what I'm really, the reason I asked that is because I'm thinking about, okay, what actually is like the liquidity on the market, right? Because now that I'm all trained into how the DeFi space works, what actually is the liquidity of the gold? Because it doesn't really matter what the spot value is. It's what's available to sell, which is where the premium is derived from inside of those merchants that are actually selling spot. Now, this is not the direct question of where I'm going to go to. We're going to move on to that in a second. But as money flows into this market, and those that actually want physical, they're going to find out, guess what, guys? You got a 12-week delay on your physical delivery, but we can sell you the paper derivative, which is backed with 5,000 to 1 of what is a real ounce of gold, and everybody has equal share of that claim. That's actually how the paper derivative market work. Complete fucking Ponzi, completely disgusting and manipulated, which is why if you're going to get something like precious metal, it has to be the physical. It cannot be any of this spot traded valuations. It's fake. Now, when you actually turn that over into crypto, this is where we're starting to see, even if some of those legacy markets are saying, you know what, fuck it, I'm just going to throw 10 million, 20 million, 50 million into crypto. At least I have the asset. It's inside of my custody, inside of my control, inside of my company's control. This is something which is of a much smaller market capitalization, meaning it's so much easier for that price valuation to grow as well, as everybody out there listening to this right now understands. And that is why something like Hex is an even smaller market of what is Ethereum, Bitcoin, gold. That's why the volatility happens. But in a situation where hyper devaluation is occurring on fiat currencies, to be inside of assets which are true to themselves, self-custody products, they hold massive potential going into this transitional phase. And AXiS, tell me, how are you actually seeing things unfold currently inside of the Bitcoin pricing, the Ethereum pricing, and also the supply side from the chains that you can see?
Yeah, sure. Well, so like you can go into the HODL ratio here on Bitcoin, for example, and see that more and more Bitcoin is leaving in exchanges and being held for longer inside on the chain. And then, kind of something that we talked about earlier this morning was how these centralized exchanges are actually piggybacking off DeFi and pulling Ethereum liquidity out of the DeFi sector to try to fill their order books on the centralized exchanges, right? And in terms of price action, we're on the 1 minute chart here. I got Ethereum. It's now breaking. It's like holding structure and breaking out of downtrends like in record time. And it's now finding structure above these like moving averages. So it's on the very, very short time frames, it's getting really bullish. On the longer time frames, it's starting to break key structure. Total crypto market cap is broken out above long-term trend resistances. And this is all happening in the face of the adversity of things like the Restrict Act by U.S. Congress trying to pass this bill to basically block DeFi and its tracks. and big exchanges like Coinbase and Kraken limiting the amount of deposits you can put into the exchanges. Now, I know we have a firsthand account of a hexagon goes by DCC. If you don't know him, you should. Dollar Cost Crypto. He got his account restricted by 95% from being able to bring in $100,000, I think, a day to now only $5,000 a day into the ecosystem. So what this is telling me is that there's a flight to safety in crypto, and they're getting backlogged deposits because people want to bring in size, but they can't. Meanwhile, the price is just slowly grinding and chopping higher. And so what this is setting up is for a huge, just a gigantic squeeze against the dollar to the downside, safe havens to the upside, right? And you're even seeing this again in the stock market as well, where when we should have never, it still continues to test these higher bands, right? And this is all on the back of like the Fed basically saying that we'll print to whatever extent we need to save the economy, right? To save these banks. So
yeah, and I said that probably maybe a week or two ago, that even the banks in the UK, several of them were now limiting again outbound transactions of £5,000 per month. We saw this in Canada a long time ago. That the same thing happened. I think it's probably about a year ago at this stage. So they always, they guinea pig it. They test it in certain territories first. But you can see that the general trend is, that's why they say Operation Choke Point. They're trying to stem the problem. And I think it's probably safe to say that it will be efficient enough to a degree, but you still have a situation inside of crypto where there's a significant amount of money on the sidelines, which is actually still propelling into the markets now. And there are still jurisdictions, take China, Russia, Asia, those bank accounts are still open and still inflowing into the market, while they're saying to the Western market, guys, you're not allowed to buy this stuff. Okay, this is, we need to regulate this. We need to do this. We're stopping you actually getting out of what is collapsing to actually keep your purchasing power secure. No. We're doing this all for your protection. It's for your own good. Yeah. No. So that's when like the crunch point happens, and that this system is not a system that is, one, fair, two, that you want to play in, or three, that you even want to live in. And this is why I moved out to Asia a long time ago, because you can see this coming. And if you're in a position where they're limiting how you even move your money, you pay your taxes, you earned your money legitimately, you do all these things, and they still say, no, you cannot do that. Fuck me. That sounds like a Ponzi to me.
Indeed. There's no doubt about it. I mean, the only way that new, Federal Reserve notes come into existence is by debt. They issue them at a rate where the Treasury notes have to be pay for these Fed notes that have to be paid back in Fed notes with interest, right? So it's a closed loop Ponzi downward death spiral, right? But we're even seeing it reflected here in the stablecoin index, where the stablecoin index has now broken the parabola, and for 3 weeks now it'll be if it closes below this week, it's basically set to drop. It's like a teardrop hanging ready to fall off your face, man. It's literally set to drop. This means that anybody that's sidelined in stablecoins right now is basically praying for a spike up, where and on this chart, when things go up on the stablecoin index, it means that crypto is going down. But in the case of this, like the dominance of USDC DAI and DAI and Tether in terms of their market dominance is falling, because in the valuations of real crypto like Bitcoin, ETH, Hex is rising. Yeah. And so this is setting up for, it's already closed. This will be its third week below. This is in your face proof that the crypto market's about to rally, and it's about to rally hard. But I don't think it's all like unpredictable doom and gloom. This is just part of the 4-year cycle of Bitcoin. That's something that I've been talking about now for 2 months. I wrote a piece. Yeah, it is, because now you're actually faced with massive risk of holding fiat money. And so that's only going to make the parabola even more expansive, right? But anytime, like, again, I've been talking about this since February in my articles on my website, axisALiVE.com. If you look at the blogs, they're free. I went into this in detail that whenever Bitcoin price gets above the 350-day moving average, which is the gold line, it goes to the green line and then the red line in 2 out of 4 cases. So in 2012, it got to the green line and then in the red line, and then in 2015, it got to the green line and consolidated sideways for 6 months before it got to the red line. And then here in 2018, coming off the bear market lows, it broke the yellow line, went to green, and then red. So there's your 2 out of 3. And then in 2020, COVID crash, it got above and held its support within 90 days and then ran up to 12,500 before starting the bull run. Well, where are we now? As I was saying back here, when everyone was being a bear, saying things were going to go down, I said, well, we got our tap of the 350-day moving average. It's only a matter of less than 4 to 6 months before we're above it, and we're going to head to the green line. Well, that's what's happening as we speak. And right now, currently, the green line is sitting at 36,000 Bitcoin, red line's at 45,000 Bitcoin. And this is easily on the table in terms of short-term price moves. And so I think like the excitement here for me individually as an investor is I'm looking at what Hex is going to do in this environment.
Yeah, and I think one of there's probably a few things I want to add there if you just give me a second. A lot of people, listen to what I say, but maybe don't appreciate that a lot of how I gauge things comes purely from interaction of wallets. So if I'm starting to see certain trends move positive, I'm going to be a lot more positive. If I see trends start to move negative, I'm obviously going to be more negative. And it's one of those things where I follow money and I follow the momentum of who is creating and what ammunition is in reserves for those types of players. And this will go across multiple chains sometimes. What we have going on right now, we have a lot of volatility because it's how would you describe it? You describe it as like two currents of the ocean. One I forget the name of what it's called, but one is like high tide, one is low tide, and they both basically clash in the middle and they fight each other a little bit. So we're really having like a clash going on, and it would be the bulls versus bears. However, we know what is happening to the valuation of the dollar, and the dollar currently in the paradigm that we live in has been the force of everything. That has been the liquidity of everything. That is starting to get challenged. That is starting to change. We're seeing a dynamic of the landscape of everybody's reality changing. And it's those that will adapt, and you're either going to be on one side or the other, or you're going to be 50-50 and split. Okay, maybe half cash, half crypto. Let's see what happens. Let's see if it goes down. So there's 3 scenarios that basically people can be in. What I see currently, as of my mood's completely changed within like literally 24 hours. Things were so negative on chain to then be so bullish and positive on chain. And it's a hard information to take, because for the majority of people that will take this information, it will confuse them. It will just like, it will knock them out. They're going to get chopped up, which is what happens to most traders. But when you actually take it objectively, you take it, bring it in, follow how it moves, follow how it goes. And yes, it happens on a short time frame. It's important to watch short time frames, because it's those very crucial pivot points when finally a decision is broken and you're with that trend. You allow confirmation of that to happen, and then you know what the projection is going to be after that point. But it's hard to actually come out and say things in a timely manner prior to real confirmations. So at the moment, we're in that equilibrium stage. And I'm coming out, I'm trying to give information, make it valuable to you of how particularly I'm seeing things develop at the moment. So it now looks like this break is now bullish. What I found very interesting earlier, and I put a tweet out, and I was very curious whether because the resistance levels inside of the Bitcoin were becoming harder to actually break, whether the accounts that were responsible, and again, this can be very deep layered inside of the chain. It can go all the way back to exchange owners, very influential people that are able to make ginormous wicks, right? Just throw down $50 million like that, 50 million like this. Because at the same time, it's not only the values that they're dropping down on the spot chart inside of Bitcoin, inside of Ethereum. At the same time, and this is unprovable because it's all behind sexes. It's all hidden inside of exchanges, and only the inner circles know the answers. And that's going to be, closed group of guys that are, concentrating that information for self-gain, self-power, and probably ultimately manipulation of where things probably are going. But when people are doing spot trades, it's only logical that they're doing extremely leveraged trades at the same time. AXiS, maybe you can explain this one a little bit for us of how this may actually operate in a trading term.
Yeah. So I actually only got 4 minutes left. I got a meeting. I got to be in. But, yeah, we might pick this conversation up either later today or tomorrow because it is a big topic that's going on. We kind of did just rush out here and throw up. But yeah, I mean, look at this is just quickly just to go back. Let's finish off this thing of the dollar. I did a fib retracement on the dollar, so like the downside potential here would be 6%, right, to the 95 level. This would hit the 382 on the fib retracement, going back to 2008 data from our most recent blow off top. So you could see that right now we're breaking key structure. It tried to bounce there, but it failed, and now it's heading lower before trying to recover probably, into 2024, which is where you'd get your relief rally on the dollar next year. But this could be I'm actually been of the belief that this is going to be a very, very good year for cryptocurrency. So shout out to the boys. And yeah, as far as leverage trading, when it gets into that game, big money's made by big spot buyers. They step in, they both take a position, they get the price where they want to go with spot. They could take a bit of a hit on that, but then they can take the other direction on the trade with leverage when the market wants to come back down, for example. And you can make money to the upside, take a small loss, and you can make money to the downside at a magnitude more. So in this kind of an environment, so that's why you get this extremely volatile moves on the on crypto right now as it continues to slightly trend higher with all this backlogged ammunition that's coming into the market. So.
And the only thing I want to add to that is we're going to reach certain price targets now because we're imminently in range. For me personally, what I see on chain, I'm seeing 1900 ETH as being a very crucial time. That price breaks through, the liquidity drops off the chart, and actually there's been a lot of bots that have been coming to the DeFi, coming to DEXs to extract Ethereum out of the DEX and put it into the exchange because the exchanges are starting to run out as the price is moving up. They have no inventory, they have no supply, they cannot make their trading fees, they have to collect it. And that's why you start to see like big $2, $3, $5 million orders straight into the DEXs inside of Bitcoin, inside of Ethereum, because they're extracting it through MEV bots to pull it out. And yeah, so take that for what it's worth. Bitcoin, obviously, AXiS, correct me. I'm seeing 29,300. If both these triggers, these price ranges get broken, the liquidation event is going to be pretty fucking massive, which is then going to fuel it again. Because a lot of those liquidations have to buy back at market price to pay out everything involved with those deals, those contracts inside of exchange. So yeah, that's what we're seeing. And there's a lot. There's a lot at stake.
The other day here at the 29,182. This actually, I saw this happen on Coinbase the other night, where it was attempted breakout and then a rejection. And so this is exactly the kind of manipulation we're talking about as we continue to make floors on the dead bodies of those who came before. So looking forward to a pretty exciting year of volatility, and there's a lot of money to be made. Last thing I want to say before I go, guys. If you haven't heard, I made a tweet on Twitter there. It's talking about that market making course that we're putting together with the help of SilvertheAntidote and then Crypto Sloth.
Maybe.
And a lot of the good information that's inside the coursework there has been, is intelligence that was brought on by SilvertheAntidote. So you got to give props where it's due. But yeah, make sure you go sign up. There's limited spots for that. It's going to be a Zoom call. So then we are limited on the number of people we can have in there. So if you're interested in that, go check out the website. And as soon as you load up axisalive.com, it'll be right under the middle here. You'll just click in here and you can book your spot. So looking forward to seeing everyone. Sloth and I will actually upload a video the next day or so, kind of detailing the coursework a little more in detail and give you guys an idea what you can expect. So looking forward to you
Let me
guys
add to that.
on that.
Let me add to that. 1 second. Literally today, I just spent $15,000 on getting access for myself into various areas because I'm a very big believer in investing in your own education. You have to invest in your own education. People out there saying everything's free on the internet. Nah, it's not like that. Because most people won't want to spend time if something is of value, giving it out for free. They give it out for free because there's a reason at the end. And that's all I'm going to say on it. But me personally, I'm happy just to invest in myself, get myself smarter, see what's going on inside the chains, and that stuff costs money. So invest in yourself is probably the best thing I could say going into 2024 and 2025. Make yourself smart, make yourself, connected to people that know what the hell is going on, because most people don't know what's going on.
All right, everybody. Appreciate you, Silver the Antidote. We will be back soon with more content on axisalive.com. We'll see you guys soon. Peace.
Laters. Bye.